Well, hello, good evening, and welcome to the program. This is Daily Politics, live on Trust TV, your hope for everything politics, policy, and governance. My name is Abdullahi Ahmed. Tonight on the program, we dive straight into the rising public outrage over the relentless increase in the price of PMS, which has triggered a spike in transportation cost and general goods across the country. The cost of living crisis continues to deepen as Nigeria's oil giant, the NNPC, on Wednesday hiked the pump price from 897 naira per litre to a little over 1,000 naira per litre, an astronomical rise in just a few months. Meanwhile, the federal government claims it is not to blame for the sudden increase in the pump price. To help us dimension these issues, we're joined by the head of information at the Nigeria Labour Congress, Benson Upa. An energy expert is joining us in the studio, Kelvin Emmanuel, and Billy Gillis Harris is the national president of the Petroleum Products Retail Outlets Owners Association of Nigeria. Both are joining us virtually for this conversation. Good evening, gentlemen, and thank you most kindly for joining us on the program. It's good to see you.
Thank you so much for having me. Good evening.
Just to set the conversation in motion, let's hear some of the thoughts of Nigerians who were caught in the middle of all of these developments and their views about the current state of affairs.
People will not like to even pay. Some prefer to trade than to enter motor now.
I bought yesterday 995 naira. Then now I went to station to buy. One I saw there is 1,050 naira. Honestly, it's not funny. It's not funny at all. It's not funny because when the market women, when they heard that the price have increased, definitely the commodity market will go high. And to affect the people.
Our first buy in the morning is the normal price, 950 naira, 960 naira at Kubwa side with that. So but now when I come here again, it's 1,050 naira.
I used to use 1,000 naira fill my tank as a keke rider. Now, before I will fill my tank now, it's almost getting to 9,000 something, going to 10,000 before I will fill my tank. But before was 1,000 naira or 1,000 to 1,400, I fill my tank. But now the thing is going over. We don't know. We are looking in paper. They are saying Dangote Refinery. When Dangote Refinery starts refining petrol will go down. This and this and this. They are doing it outside country. Now petrol don't come back to Nigeria. They will refine it in this country. Now things are going higher.
Thoughts of some Nigerians in the Federal Capital Territory with regards to the new normal now. The price of PMS, as you can imagine, has become central to the nervous system of Nigeria's economy. So let's get right into it and dimension some of the issues. I'm going to start the conversation here with someone who should be able to provide Nigerians with some sense of what is actually going on, because Nigerians really feel dumbfounded about all these astronomical rise in the price of PMS since the inception of the Tinubu administration. How can Nigerians best understand what is currently going on right now?
Okay, so first of all, it's important for us to situate the conversation within the context and to acknowledge that when President Tinubu took over last year, Nigerian economy was actually at the verge of bankruptcy. And the first problem they had was the government didn't really come out transparently on how much Nigeria's actual daily consumption is. That affected his ability to do on that recovery effectively within a budget structure. So you notice that somewhere around maybe 32 to 35% of the budget was financed through deficits, And the fact that between 2019 and 2022, the Central Bank of Nigeria created 17.3 trillion naira through quantitative easing, monies that are not backed by assets or reserves, and it caused sudden devaluation of the naira, and that impacted on the landing price of PMS. Helps you to understand why the government could no longer provide under recovery on subsidy, because the exchange rate moved, And this is also because Nigeria has had a situation where for the last 20 years, it's not had functional refineries until Dangote came. In 2006, Dangote and Femi Otedola and a few other people through the Blue Star Consortium bidded for the Port Harcourt Refinery. They won the bid. It was not, the share purchase certificates were not signed by President Obasanjo before he left office. 2007, it was reversed. And that was where the vision to build the Dangote Refinery came. So, for you to understand why petrol has moved, you have to understand that petrol is imported in US dollars, number one. Number two, there isn't clarity on the actual daily consumption, because you had a situation where in 2001, Nigeria was consuming 21 million liters of PMS. And that number has grown at the compound average growth rate of between 7 and 11% yearly.
Right.
And it's moved to 55, then 70 million liters. And I keep telling the government that that number of 70 million liters is false. It doesn't have any empirical evidence to show in terms of population growth, in terms of the number of cars imported, tricycles, motorbikes, generators, to show that there's been that sudden spike in the level of consumption over the last 23 years. So if you're saying that between 2001 and 2010, it grew from 21 million to about 29.1 million, yes? And then you're saying all of a sudden, between 2010 and 2024, it grew from 29.1 to 70 million. It's ridiculous.
Yeah, so what does this lack of transparency signpost? I mean, Nature has given us several reports in the past that seems to indict the figures that we've been receiving over the past few decades. But what does it signpost? How is this also a part of the problem that we're dealing with today?
The how is part of the problem is that basically, if you can't be honest with Nigerians on Nigeria's actual daily consumption volume, it will be difficult for you to provide under recovery, because under recovery today is anywhere between 471 and 500 billion monthly, right? That's just easily 6 trillion naira on a yearly basis. What's the government's budget? How much taxes has it collected? How much revenues has it collected from government-owned enterprises? Now, they can use to finance. I think year to date, FIRS has done 11 trillion, if I'm not mistaken. Yeah. The budget is 28 trillion, if I'm not mistaken. How much is the contribution of the government-owned enterprises to the budget? What's the deficit? Deficit financing is 52%, which is actually 12% higher than the fiscal responsibility level of 40% that is stated in the FRA. So it's important for us to situate it within this conversation and realize that for the government to actually appropriately apply a subsidy on PMS, it needs to be honest with Nigerians on the actual daily consumption, which I believe is not more than 35 million liters per day.
Okay. Interestingly, that we can oversimplify it by saying that this is largely perhaps a bookkeeping problem. But that is to oversimplify the question anyway. But let's head over to Port Harcourt, where the national president of the Petroleum Products Retail Outlets Owners Association of Nigeria is standing by for us via Zoom. Mr. Billy Gillis, Harry, good evening to you. Thank you so much for joining the conversation. Earlier in the day, you were speaking with a newsman, and you did talk about how this particular lack of transparency that Mr. Kelvin is talking about is also at the heart of the problem. You say, we've seen the template of the NNPC, but however, when Dangote is brought into the conversation, there is seemingly no transparency about what the numbers are. What in essence are you trying to say is going on within this particular area?
Well, thank you for having me this evening. The fact of the matter today is that petroleum price has gone. NNPC has announced the new price. That is real. As well as stability taxation, we are able to see what NNPC has sent to us in our normal channels of communication, but that's not what we know. And that's why it's difficult for us to answer any questions about Dangote or well. But we are very proud, very happy that Dangote Refinery is on stream, and we really wish and we want to do business with them. But we need to know how we have to stabilize the business and make sure that we are able to take petroleum products and deliver to Nigerians so we can be able to do business, we can be able to move from one location to the other, and we can power whatever that is required to grow daily businesses to build the economy of the country. That's where we are.
Hello, Mr. Harry. I think we have a problem with the connection there. We're going to work on it to try and get him back. Do we have the head of the information unit at the Nigeria Labour Congress? Okay, I think we have Mr. Benson Upa. Good evening to you, Comrade Upa. Thank you so much for joining the conversation. The NLC has been quite clear about what's been going on over the past few months. You say the presidency or the administration has given you the new minimum wage with one hand and has eroded that since the new template emerged just a little over 2 months ago. However, things are getting worse, apparently, because the new template is even much more dire. What is the position of the NLC vis-a-vis a conversation about the federal government stepping into the fray? Because the government is very clear. It says it is not responsible for the price regime. We have the Petroleum Industry Act in play. It can no longer determine the price of the product. It's a willing buyer, willing seller market. What are the thoughts of the NLC regarding this development? Okay, I think we're going to have to work on that connection just to... All right, we're going to work on that connection with Mr. Benson Upa, because apparently we can hardly make out what he's saying. But bringing the conversation back here into the studio, Mr. Kelvin, let's talk about why the Dangote Refinery appears to be the solution before it came on board. But now Nigerians are scratching their head dumbfounded, saying, listen, we thought, having a local refinery here was going to be the silver bullet. But what's going on right now? You heard what the national president of the Petroleum Products Association or Retail Owners Association had to say about the seeming lack of transparency about the data. There is no engagement. They don't know what's going on.
Okay.
Yeah.
Okay. First of all, I need you to understand that the Dangote Refinery is a business, and the Dangote Refinery is subject to regulators. Sections 205 and 206 of the PIA has not been complied with. So it means effectively the market is still deregulated. Sorry, it's still regulated by the government. And that means that the government today sets price because NNPC has not come out to officially announce that it's complying with sections 205 and 206 of the PIA, like it did for diesel and for ATK and Jet A1. So that market is still regulated. The Dangote Refinery will give you data and quotes on diesel, ATK, Jet A1 and other products. Yeah, but it won't give you on PMS because PMS is still controlled by the government. The day the government comes out and puts out an official press statement, NNPC does that, which is their role, that the market is deregulated, willing buyer, willing seller, and they are willing to comply with PIA that says NNPC retail should not control more than 30% of the market, so that them likes of Dapman, Ipman, and Moman can take the remaining 70% of the market. You will see that the Dangote Refinery will show you its own pricing template. Okay, but for us to be able to situate the conversation and understand the pricing template of the Dangote Refinery, I want us to see that the price, the recommended retail price of PMS you have out there today is controlled mostly by the exchange rate. Yeah, because the government has not effectively started delivering the 12 million barrels of crude oil it promised to the refinery for October under the Naira-based crude oil sales or swap program. So all the crude oil feedstock the refinery uses is refined in US dollars. So you can't run a business where a refinery will buy crude oil feedstock from you in dollars and sell to you in Naira, and you don't have a functional forwards market where you can lock in contracts to hedge the risk so that if the exchange rate moves, you don't make a loss on exchange rate differential. That's the problem. So you have basically, when you look at the pricing system, there's a flat system for pricing gasoline all over the world.
Right.
Per metric ton today is trading between $680 and $700. 1 metric ton is 1,341 liters of PMS. Then you have the premium on the grade of PMS. Then you have other costs. All the other costs are mostly because the government lacks infrastructure for evacuating PMS. You have things like demurrage, you have things like shuttle, you have things like throughput, you have things like inspection, NMDPRA fee, you have distribution, then you have margin, that NNPC. But the question that Petron and all the other IPMAN and associations should ask themselves that fall under the independent marketers and major marketers is, why are they allowing the NNPC to be sole buyer of PMS from the Dangote Refinery?
I thought we've gotten ahead of that because this week we understand that that is no longer going to be the case going forward.
If that's no longer going to be the case, then NNPC should come out and put out an official press release that the market has been deregulated so that there will be competition. That's what should happen. Why hasn't NNPC done that? Because it wants to push the blame to Dangote to make people believe that the reason why there's an increment in price is because of the Dangote Refinery. Meanwhile, for the month of September 2024, last month, NNPC imported 814,000 metric tons of PMS, or 1 billion liters. It already has booked cargoes up until December 2024. So instead of use the crude oil feedstock it has under the crude intervention stock to supply Dangote to achieve full capacity utilization, it is instead using those crude oil to swap with international traders to get PMS in Nigeria.
But some say that, you know, it's dangerous to rely solely on Dangote if we're talking energy security here.
How many companies in Nigeria over the last 30 years, Abdullahi has invested $10 billion in Nigeria? How many companies? The barrier to entry for building a commercial refinery that size, that is the 7th largest in the world, not in Africa, in the entire world, is very high. How many companies in Nigeria today can pool equity and debt financing to build a refinery even half of that size? Mention 5 of them. So if a company has done that over the last 7 years, the government should work with the company to do backward integration. The talk of monopoly doesn't come into play because the barrier to entry is so high.
Right.
The companies and people complaining about monopoly should bring their monies from where they kept it outside Nigeria to Nigeria to invest and compete.
Right. Okay, I think we have Mr. Harry back online, so let's get back to him. Finish your line of thought, but also talk to me about what your expectations are, because you talked about an engagement with the Dangote Refinery so you can find some sort of lasting solution to this quagmire that Nigerians continue to deal with. Just finish your line of thought and then paint a picture of what you mean when you say there needs to be a line of communication between players like you, for instance, and Dangote Refinery that is at the center of this conversation. Okay, it does appear that that challenge is still there. So we're going to keep it here in the studio. So when the government says, listen, you did talk about how the deregulation is not yet complete because of the lack of compliance or implementation fully of the Petroleum Industry Act. But when the government comes out, because the Minister of Information and National Orientation came out earlier in the day and said, listen, don't look at us. We're no longer, in charge of running the affairs of this particular sector because of this new regulation, this new legislation that has completely deregulated the sector itself. This is all because of the market forces. He talked about the forex market. He talked about the Middle East crisis and so on and so forth. Does that answer the question, or is it more of the deflection? The
Minister of Information is confused. He's confused. What market forces is he talking about? Supply Dangote crude oil feedstock. Nigeria is a major producer of crude oil. Why is he not able to supply?
Is it that simple?
I'll tell you what. India has the largest refinery in the world, 1.2 million, owned by Reliance Industries. Twice the capacity of the Dangote Refinery. Yeah? India doesn't produce crude oil. But have you ever seen a refinery in India complain that it lacks crude oil feedstock? India has a strategic petroleum reserve. I think they store anywhere around, maybe at every given point in time, they store about 35 million barrels of crude oil at every given point in time, maybe 31 or 35 million barrels of crude oil. India does not produce crude oil, but it has the largest refinery in the world. So explain to me how Nigeria, that is a major producer and is a member of OPEC, is unable to supply a conventional refinery in Lagos, a brand new refinery with crude oil feedstock. And the Minister of Information is telling you market forces. NNPC simply doesn't want to get out of the business of importing substandard petrol to Nigeria. It doesn't want to get out of that business. The turnaround maintenance that it's expended $24 billion on over the last 20 years has failed. The $4 billion that was given to Port Harcourt Refinery to bring it back over the last 5 years has failed. And what it plans to do is basically bring its blending and curing of substandard products to Nigeria. So the Minister of Information
is that a fact or suspicion of yours?
Look, we've seen reports that there is transshipment of off-spec petrol through blending plants in Central Europe and here in West Africa. We've seen reports and evidence of that, okay? And if you had a situation where 8 different times the Port Harcourt Refinery Company, that is a subsidiary of NNPC, has failed to come up and say that they met up with the promise they made to bring the refinery back to life, it tells you that the turnaround maintenance has failed. What are you now going to do with the refinery? If you're not going to strip it into scraps, what are you going to do with it? Time will tell. But the point here is that the Minister of Information talking about the Middle East and about how the tensions between Israel and Iran is making crude oil prices to go up has no bearing on the fact that the government has failed to supply the Dangote Refinery crude oil feedstock. It has no bearing.
So the swap program, the Naira for crude swap program, where are we on that one? Because this is the second week of October, and we understand it was supposed to kickstart at the beginning of this particular month, but we also understand that, you know, that has not happened yet.
It's interesting because today is the 10th of October. We're 10 days in. Listen, it takes 4 days to load a ship with crude oil, a big ship, 2 million barrels, a VLCC cargo. It takes 4 days, which means that you'll be loading anywhere around 500,000 barrels per day. So the question I have is, if that Naira-based crude oil sales was going to begin on the 1st of October, and you promised the refinery 12 million barrels for October, why didn't you start delivering before October? That's the question I have. No one is able to answer. Why are you booking cargoes to import substandard PMS into Nigeria when you have a brand new refinery in Nigeria? Does it make sense? It doesn't make sense. There's no economic argument to back it. Because I'll tell you, Abdullahi, right now, based on what I know, ex-refinery price for Dangote PMS is actually cheaper than the landing cost of bringing substandard PMS into Nigeria. Considering the fact, Abdullahi, that the sulfur content for the PMS from the Dangote Refinery meets up with the ECOWAS framework, meets up with the framework set up by the Nigerian regulators for sulfur, and it also meets up with the octane level. So explain it like I'm a 5-year-old.
So we're talking premium quality.
The premium quality. What is the economic justification for bringing in substandard products over utilizing the domestic refinery you have that can fully backward integrate all the demand for PMS and other petroleum products of Nigerians on a daily basis? There's no economic justification. It's dead on arrival.
Yeah. And how do you explain it to Nigerians who want to simply understand the mix-up here? Because there's been the blame games that we've seen over the past few months, right? And to the point where we are right now, where people feel like their lives are being upended with this volatility in the pricing, which is going up astronomically. People are unable to go people are unable to run their businesses. People are unable to afford transportation to their places of work. People are finding it very difficult to make ends meet. Looking at the current state of affairs, how do you explain to Nigerians how best to situate this particular issue and who to hold responsible?
I don't think the milk is already spilled. I don't want to play the blame game, but let me give you a very direct and simple advice for Mr. President. What Mr. President should do is, Nigerians have national identification numbers. They have BVN. Connect their NIN to their BVN. And pick out the most vulnerable Nigerians, 25% of the most vulnerable Nigerians. Pick them out that are in the banking system, okay? And simply reimburse them 50% of whatever they spend at the pump stations. It can be done. Simple way. So the monies that are saved from the regulation, you simply use a chunk of it to reimburse the most vulnerable people. Reimburse them 50% of whatever they spend at the pump stations, and use technology to stamp out corruption in that exercise. It's something that can be done if the president puts his foot on the ground.
Is that another back channel subsidy that we can
It's a back channel subsidy, but it's a way to alleviate the pain of the most vulnerable people immediately, directly.
And
that is not giving people bags of rice or tomato or groundnut oil.
Aren't we living in a country where there are too many vulnerable people to support?
Yes, there are too many vulnerable people, but in that demography, you can pick out the most vulnerable and reimburse them 50% of whatever they spend at the pump.
Yeah, I think we have Mr. Gilly Harry back online. Let's try it again. I think we have him via phone now. So please continue with your line of thought there. Apologies for the poor connectivity.
No, that's not your fault. That's part of the problem we're talking about, that we should have been beyond this stage, even in our communication, subsector of the economy. I wanted to respond to the gentleman in the studio there briefly. First, I appreciate the fact that he's able to bring numbers to play, and I believe that will be more like a roundtable conversation that we should be looking at. We have a problem here. Problem we have is that we're not having a very effective supply, chain in ensuring that we have petroleum products in country Nigeria. We are very proud and happy that we have a refinery in the capacity of Dangote Refinery. But the fact here is, his advice is Petron, Pierre Hickman, and all of us should be able to
Hello, Mr. Harry, are you still there? Okay, it appears we have lost that connection yet again, and I think he's getting to the sweet part where perhaps Kelvin is waiting for that rebuttal so that he can understand the alternative solution that he has. We have a couple of minutes to spare, so we're going to work on that connection to get the national president of the Petroleum Product Retail Owners Association of Nigeria back into the conversation. But how long do you see this particular situation lasting? Because the government wants us to believe that, listen, it's a transition period. In due time, some of these processes will be fine-tuned, the relationships will be improved upon, and things will settle down.
NNPC has a $6.8 billion loan with international traders, a modified carrier agreement that it's structured. It doesn't have a crude oil feedstock to supply in that crude oil swap. It doesn't have the cash to pay. Even the products it was taking from Dangote, the PMS, was backed by letters of credit from a bank in Nigeria. I won't mention their name. At $28 per metric ton in finance cost. Okay? So it depends on how the government responds. The fact that it's going to accumulate more debts, instead of use that crude oil feedstock to give Dangote, it's going to book cargoes and give the little crude oil feedstock it has in exchange in crude oil swaps to bring in substandard PMS into Nigeria doesn't actually help the case. My advice is NNPC needs to go out of the retail business. I've always said that NNPC needs to be unbundled. The NNPC has a governance problem. There's lack of transparency. The annual financial statement for 2023 poked a lot of holes, upstream, midstream, and downstream. And I honestly think that the government should allow the private sector lead the refine the midstream, downstream business and focus on regulation. Okay? The government needs to allow Dangote to take over the market.
The government saying it is not directly involved.
It is not directly involved, but NNPC has booked cargo till December. The book cargo till December. Last month it imported 1 billion liters of PMS.
Do we know whether this is before Dangote or after Dangote came on board?
After he came on board. Last month they imported 1 billion liters of PMS. This is a fact. I will not speak without facts. So why don't
think it has anything to do with energy security, that over-reliance on Dangote could be risky if something happens to the
over-reliance? Right. Is there something like over-reliance? Somebody invested $20 billion to build a commercial refinery in Nigeria, brand new, not fairly used, brand new, and the government says it's over-reliance? How? The government is asking for FDIs to come in. FDI came in. A company built a refinery that size, right? The last time you had an IOC invest maybe half of that in Nigeria was in 2014, Egina, in the upstream for production of crude oil and associated gas. Right. That was the last time. The last time you had another ticket of investment that size was NLNG Train 7. Even the FG share of that was structured through a modified carry with a free exim. So is there such thing as monopoly?
Is there a deliberate attempt, do you think, to undermine the Dangote Refinery and the impact it is supposed to have on the domestic market?
Well, I wouldn't say there is. But what do you say when the evidence points to it? I can neither confirm nor deny.
Okay. Now, as we wrap things up, let's talk future outlook now. Do you foresee any further hikes in petrol prices in the near future? And what can Nigerians expect in terms of affordability? Because that is a key component of this conversation.
If the government says they're deregulated and they've aligned with sections 205 and 206 of the PIA, the price of PMS will depend on, number one, whether the government goes ahead with its Naira-based crude oil sales, which will effectively take the pricing benchmark from Platts to a Naira peg. If the government doesn't do a Naira peg, then it will depend on the exchange rate. And the exchange rate is also dependent on how much NNPC is able to remit dollars to CBN in its net external reserves to meet up with its balance of payment obligations. Yeah, it will depend on how it's able to control inflation and that inflation to interest yield curve in terms of the interest rates and the exchange rate induced inflation. Yeah, and how that exchange rate affects the pricing of PMS in Nigeria. Yeah, but I'll tell you, what should Nigerians expect? Nigerians need to put their attention on their government and ask Mr. President to backwardly integrate. Backward integration is the key. It's either you go with the Naira-based crude oil sales and do a swap, or you go with the free markets and focus on building your external reserves so that you can have Naira appreciate to a level where the price of PMS will start to float back to a reasonable level. So it's not exactly a straightforward answer. It depends on several variables.
And based on the current trajectory, which one is most likely going to happen? Well,
the evidence is pointing to neither of the two. I don't understand it myself. And the reason I don't understand it is because the government announced a Naira-based crude oil sales, and that hasn't kicked off. If it hasn't kicked off, then it wants to go for full deregulation. It should come out and say it. And allow the members of Petral, Moman, Ipman to go directly to Dangote Refinery and buy their products and compete.
All right. Okay. I get a sense that lack of full deregulation itself is also a part of the problem that we're dealing with going forward. But of course, this is a developing issue and Nigerians are paying the price for it. I'm afraid we're going to have to end the conversation here for now. Mr. Kelvin Emmanuel, as always, thank you so much for joining the conversation. We appreciate your expert analysis on this one.
Thank you for having me.
Thank you so much for your time.
Thank you.
All right. Well, this is where we wrap things up on tonight's edition of the program. Thank you most kindly for your patience. We apologize for our inability to have a smooth sailing conversation tonight. But of course, we go again. We'll be back tomorrow live at 8 p.m. Until next time, my name is Abdullahi Ahmed. For myself and the rest of the team, thank you for watching the program. We'll see you soon.